All right, now it's time to put it all together. This is where the magic happens. Wallace Fisher, Wall Street insider, longtime stock investor, brother. I think it's time to put it all together and show them what it's like to really sit down and analyze a stock in the market and make a buying decision or a selling decision. You ready?
Let's dive in.
All right, I'll
All
follow
right,
your
so
lead.
all right, Mark is gonna be the student again. Let's go back to trading view. And so what we're gonna do is we're gonna go through just a quick way on how I analyze certain stocks to its peers, to find out what's a good investment to make. And then once I decide whether or not I want to take whatever risk, and I'll show you what I do. So we're gonna do some really good brand names. We're gonna do Walmart, Costco, and Target, and then we'll do Lowe's and Home Depot, and it won't take long, especially since what I showed you just now um, on what to look at and how to look at it, and it'd be real fast. So let's first get into this. So we want to figure out if I want to invest in Walmart, and so I need to compare it to its peers. I want to see who's doing the best right now, who being the best investor, right? So let's go. Let's hit Walmart. Go to the ticker WMT, and that's the Walmart ticker. And if you didn't know, you can go to what we showed you earlier, how to look up stock symbols or whatnot. But Walmart's WMT. All right, so this is Walmart, right? So let's go to financials. Let's just do it. All right, from here, now let's go to income statement. I can see it here, but let's go to income statement. This is exactly what we did. We see Walmart from 2017 to 2020. It's going up or whatnot, and we see total revenue. Let's say from 2019, from last year to now, you see 523 billion to 559 billion, and that's a 14% growth, right? From 2019 to 2020, that's a 14% growth. And if we go down to EPS, come down unit per share, and we're looking at the growth from last year to this year. So we see how it's been going from 2017, but from 2019, from 522 to 477, that's a negative growth. That's a negative 8% growth. So total revenue, 14% growth, negative growth of EPS, right? And this before I dive into anything else. All right, so that's almost a negative for Walmart. So let's go to Target, TGT, see how they look. All right, go back to financials. All right, income statement, same thing. All right, so we're looking at 2019 is 78 billion to 2020, 93 billion. That is a almost 20% growth in total revenue. All right, Walmart was at 14, Target is at 20%. Let's do the EPS real quick. EPS, we had 6.42 to 8.73, right? And that is a 35% growth, right? All right, so right now, my bases on Walmart don't look good because it looks like Target is outperforming, as far as revenue growth and basic EPS growth. So let's check another one. Costco. Costco does well, and so they're all in the same. See who I want to invest in. Look at Costco. All right, go back to income statement. Financials to income statement. You see how fast this is? Like real fast. So we see the growth, right?
When you know what you're looking for.
152 billion to 166 billion. So Costco has a 9% revenue growth. If we look at the EPS, right? The EPS from what is that, 8.22 to 9.05, they're looking at a 73% EPS growth, right? So now, Walmart had a negative growth in EPS, 14% growth in total revenue. Target has a 19% growth in total revenue, 35% growth in EPS, and Costco has a 9% total revenue growth. And right now, Target looks like the best. So if I'm going to invest my hard-earned money, I'm going to want to invest in the best of breed. I'm going to show you how to look it up, just to try to. You want to look at where the stock is going, but you want to see what is done, why Target has the best numbers, right? So go to up top, right underneath trading view chart. There we go. All right. So this is a better chart, right? So hit Costco. Top. There you go. All right. So from the pandemic, you see in towards the right, May, come further down, Mark, and hit 1 year. See the year-to-date thing? Hit 1 year real quick. Underneath. There you go. Oh, that's it right there. Okay. So 1 year. All right. So you see from March to now, it had a pretty decent growth, right? After a horrendous downturn, it went up, came down a little bit, and went up and had a big fall. But from there, all the way up, it has grown pretty well. That mean where it is right now, 363 looks like it gotten back to that level. But it's not where its highs are at. What is that, around 395? Right. So go to WMT. So the chart looked decent, but not the greatest. So you see Walmart, almost the same thing, right? Horrendous fall in March and coming back up. Let's look at Target real quick. TGT. Look at Target's performance compared to the other two.
Wow.
So right now we know Target right now is the best of breed. So if I'm gonna invest in any company right now, Target is the way to go because of their revenue growth and their EPS growth. See how simple that was?
Man.
I came in looking at Walmart, but looks like Target's the best one.
But that's what you talked about when you talked about best of breed and being able to make a comparison and look inside your industry. And you kept talking about comparing to peers. It's like we teach people about the different sectors, different kind of investments, different kind of stocks, and then what the numbers are and what the numbers mean. And so now you're able to make a good decision because you're not sitting here saying, oh, I bought Walmart, but dang, man, I wish I would have bought Target. I bought Costco, but man, I wish I would have bought Target, because you know how to not only analyze a stock, but you're able to analyze these stocks in that sector and then pick your best option in that sector to try and have the best of breed.
Right. And which is true, right? And when you're looking at the best of breed as far as performance wise as well, even though Costco had a higher EPS than Target did, but Target has a higher growth, right? EPS growth. If actually, you want to look at it, go back to the ticker, and this is the old tail right there. You see TGT.
Right.
And hit TGT/WMT. There you go. So this shows you how Target is performing against Walmart. Now this is Target to Walmart, and it is outperforming Walmart. It has outperformed Walmart all year. If you inverse it, reciprocate it, you'll see Walmart performing to Target. You see that chart going down. So right now, Target is outperforming Walmart as far as the chart wise, right? And this is a good barometer on how to look and see, okay, and my thesis right, so we saw how Target looked. Now we saw how Costco looked. Now let's compare it to each other, right? You see, Walmart is underperforming, seriously underperforming Target, like seriously. Now you can, be contrarian and say, hey, you know what, I think this is a good time to buy Walmart because they're underperforming for so long. Now that is a strategy, right? It's not a bad strategy, but how long is Walmart's going to underperform Target? And when Walmart does perform, is Target going to outperform as far as percent wise? Are you going to get a more bang for your buck putting your money in Target rather than putting your money in Walmart, right? And we can do the same thing with Costco, TGT, /COST. And Target outperforming Costco, right? So right now, I'm looking to get into Walmart. Right now, Target looks like the best the best stock for my money.
That's amazing, man. How you went through that.
Amazing, right? So let's do one more real quick.
Okay. Okay. Let's go
So let's
back.
go to
Review.
LOW.
Okay. Let me go back to.
Now you can stay right there.
Okay. Cool.
The financials, same LOW. Let's compare Lowe's Home Depot. All right. So go to the right, bottom right. You see the financials there. Right. So come down. All right. So here we go. So you can look at the chart right here before you even go in. So it looks like Lowe's is growing pretty well from 2017 to 2020, but 2019 to 2020, that's a big jump. So you see that. But if you hit more financials, it's going to bring us back to exactly where we were. Boom. Right. So from 2019, Lowe's did $72 billion in revenue. 2020, $89 billion in revenue, and that is 23%, right? That's 23% increase in that. Let's look at the price for earnings. EPS, 2019, 549 compared to 2020. What is that? 777, and that's a 40% growth in EPS. 40% growth in EPS, right? So go back one page. Oh, you got to X out of that.
Okay.
You see the X?
Oh, okay, yeah, right here.
Yeah.
Oops, sorry. Chart.
That's all right.
All
right. So if you go back to the financials, where Lowe's is,
okay.
Come down just a little bit. Go up. X out of that page real quick. All right, just go up just a little bit. Do your page up. Keep coming right there. Come down just a little bit. Hit that arrow. All right, here we go. All right, so you see price per earnings ratio. Lowe's is 25.8%. Remember I told you we want to take that and compare to his peers. 25.8%. And we looked at their growing revenue at 23%, and their earnings EPS is at a 40% growth. All right, and they're at 25% EPS. So let's look up Depot. 25% of our price to earning. That's a multiple. HD. There you go. See it. All right. So Depot's. Click the arrow real quick. Where we were at. So Depot's price to earnings is a little more. So Depot is more expensive than Lowe's, right? And as far as price to earnings ratio, but like I said, you want to do the best of breed. But when you dig deep down, sometimes the cheaper stock is better. All right, so go to financials real quick with Depot. It's real fast. All right, so 2019, 110 billion to 2020, 132 billion. So that's a 20% growth. You remember Lowe's at 23% revenue growth. Depot's at 20% revenue growth. Earnings per share, and it is 10.29 to 11.98. That is a 16% growth. Lowe's is at a 40% growth. Now Depot is more expensive than Lowe's is as far as multiple PE ratio at 26 and 27, and Lowe's is at 26. But if we look at it, looks like Lowe's is the better play. Let's go back to the chart, because Lowe's is growing at a better clip than Depot is. Earnings per share. So you see HD, do HD / to Lowe's compared to Lowe's. LOW. There you go. So Depot is underperforming Lowe's, and it's underperformed Lowe's for a while, right? So here, the cheaper company is better to invest in. So it doesn't matter, you have to make your decision on whether or not you're going to go with one or the other, because both of them look like they're going to do well. It's just that one you may make more through a period of time than the other, because one's cheaper than the other. And in the Costco situation and Target situation, here looks like we went with the best of breed because Target is outperforming, all three of them, right? So that way you can come up with your own conclusion. Either way, you're not wrong, but where you're gonna make the most bang for your buck, and this is how you look at it. And that wasn't even 5 minutes that we did.
Oh, wow. You know what I'm saying? That's what's so beautiful about knowing what you're doing and having complete understanding. Man, this reminded me of one of our online classes where we actually have people live on Zoom and they're able to do it in real time. Love those.
Yep.
Love those. All right, man, that was amazing. If you want more of that, make sure you jump onto the online calls and join the group. And you can get that every week, every month, kind of just have you in a position to make good decisions and have stocks looked at in real time.